let me use your favorite phrase for this time. So not to go far from the EBRD, let us turn to a statement that was issued by the EBRD, that the EBRD will help the Georgian Oil and Gas Corporation to refinance $250 million worth of Eurobonds. The state-owned corporation issued 5-year Eurobonds in 2016, and their repayment period would have expired in April 2021. The securities were traded on the London Stock Exchange. The EBRD said in a statement that the funding agreement was made in response to the economic shock caused by COVID-19. In addition, the financial package will support the planned reforms within and in the state company. This includes the development of the natural gas exchange market. For more, we can listen to David Oniani, who is an advisor for strategic planning and the funding at the Georgian State Oil and Gas Corporation. Thank you so much for your time. Great to have you with us. Tell us a bit more about your relations with EBRD. When did you start it? On what reasons? We know the purpose already, and we have the deal, but tell us, how will it go?
Well, I think Georgian Oil and Gas is really a first name that really pops up when it comes to infrastructure, large-scale quasi-sovereign companies, and of course it's a top priority for banks like EBRD, for any institutional bank really, to deal with the majors of any country. In our case, we would be naturally placed to be approached by EBRD due to the fact that the essential needs that are currently topping the agenda of the country, and also all the infrastructure developments, and in our case, financial developments that would relate to global financial crisis. All this came to a paramount importance, not only to international institutional banks, but to the government as well. So it was their first call of address, really, to...
What the company itself, the corporation itself, well, in general, EBRD is very much aware about the corporation itself, but the company, the entity itself, were they aware about some financials for the very beginning, or it went like a procedure with all kind of entities, or
well, frankly,
simplified?
Frankly, the whole rationale behind this establishing this loan facility with EBRD stems from our actual needs to face off the challenge related to our capital debt, which is outstanding. So we're talking about 250 mils of US dollars currently floating on London Stock Exchange. These are the Eurobonds that company issued back in 2016, and they're due to expire next year, April next year. So, so naturally, that was our immediate challenge to deal with the upcoming maturity of the bonds, and of course, our initial approach was to go back to the markets and roll them over for another 5 to 7 years, based on then sentiments of the markets. So starting from this year, we established a very strong bank syndicate with the top tier investment banks, and we started implementing all the efforts, gearing up probably by the early spring to reach out to markets and do the market exercise. But due to this global financial crisis that was inflicted equally on everyone pretty much because of the pandemics, we were denied this entry to the market. I mean, specifically our window was pretty much bringing the market activity to very minimum. Only big names really issued at that time, big sovereigns, and then peers from the EMEA, from emerging markets. Anyone of our size was basically deprived of market entrance. So we had to think fast, really. So our initial line of thought was to wait and see if the markets would turn favorable to us again, and then try later on this year. But we decided to proactively seek for other measures, for other alternatives, and of course EBRD was a first stop in this case. Yes. So I should really say that probably it was record-breaking in terms of timing. I mean, either for us or for the bank of that size.
2 or 3 months?
2 or 3 months that we really zapped through the due diligence process and all the, all the
details,
procedures and processes that, and also taking into account that this was not the ordinary course of the way. We were in the pandemic, so we couldn't really have rounds of meetings, negotiations, sit in the room, shake hands. I mean, we were deprived of all these basic features of business as usual. We had to do everything remotely, through the conference calls and all the distance operation of various teams. I mean, there are several parties involved in this as well. But I should say that to our benefit and to the bank's excellent work, we managed to basically put together the whole framework in about 2 or 3 months. By mid-September, we had everything ready for the governmental approval.
Could you be so kind to be more specific in regards of conditions as much as you can? We're very much interested. It's going to be for 100% refinanced by this loan, which you reached the agreement within the EBRD, or are there some additional funds needed?
Yeah, well, as I said, there was this whole rationale was basically to roll this Eurobond related liability over. So basically this facility is specifically tailored to the needs of refinancing. So it matches the exact amount. As for the terms are quite favorable and I would say even absolutely competitive to not only existing market conditions, but to actually the market, actually the rates that were originally envisaged we had issued back in the window that we were allocated back in the spring. First of all, we're talking about Euro market. It's Eurozone. It's Eurozone-based credit facility. So we had to take the advantage of the lower rates in the Eurozone. I mean, Euribor is low, but
that was a chance and momentum.
At the moment. Exactly. So we really had to capture this. And besides, as for the tenor, for example, it's twice as long as the original bond. So in that respect, we were speaking
existing
about,
one.
Yeah, we were talking about 5 years. Now we're talking about 10 years. 10 years of fixed terms. And this is not something that you would have to live for the rest of your life. It's really a flexible facility that is tailored as according to the needs of the company. And in fact, it allows us such an extent of flexibility that should the markets become favorable again in a couple of years, we could easily switch back to the markets. I mean, the terms of the contracts, because usually when you have a long institutional loans, they want you to get locked up with it and live with it. But in this case, we have absolutely no hindrance in going back to the markets. So should they become up and running again, we'll definitely make a switch back to the capital markets.
Thank you so much and congrats again. Great job.